Donald Trump seems to have made a good profit from the crypto market crash on Friday, when the United States president announced new tariffs against China. This caused panic in the crypto market, and Bitcoin alone lost about $20,000 in value in just a couple of hours. And traders rushed to buy silver and gold as they consider them a safe haven. Later, Trump called for calm, although many investors had already lost billions of dollars. And it turns out that according to Forbes, Trump owns cryptocurrency worth more than $870 million and is one of the largest cryptocurrency holders in the world. And so, knowing that his statement would cause the market to crash, he could have made a good profit from it. By the way, back in 2019, Trump wrote that he was not a fan of cryptocurrencies because their value is volatile and uncertain. But let's figure out what actually happened and why the cryptocurrency market crashed because of a single statement by Donald Trump about tariffs against China, which will only be introduced in the future. My name is Alexis Pesci. Today is October 14th. Now let's dive into this topic in detail. But before we start, I want to remind you that this YouTube channel releases several news and analytical segments every day so that you stay up to date with absolutely all the news. That's why I recommend you subscribe to this channel. Please leave a like and write a comment under this video. If you want to support the work of this YouTube channel, you can do so with any donation using the links and details in the description of this video. It says there, support the channel Alexis Pesci. Choose any format that's convenient for you. I will be grateful for any support you can give. On Friday, October 10th, cryptocurrency's value plunged due to a brief but significant crash. People were confused with the supply variety, accuracy readings, payouts, stocks, clay. Dreams with cars. The crypto market revived after a record-breaking drop. From Bitcoin to meme coins, cryptocurrencies plummeted as investors sold off their assets and highly leveraged positions were closed amid a sharp and unexpected downturn. According to CoinGlass data analysis, the mini crash resulted in a record $19 billion worth of liquidated positions. According to the Coinbase later, although cryptocurrency prices have since recovered, on Friday, positions of about 1.6 million traders were liquidated. This is also one of the record figures. So what happened? Was it after Donald Trump's threat on Friday to impose tariffs against China? Worried investors abandoned their risky investments and moved into seemingly safe government treasury bonds and gold. The NASDAQ index, which is mainly focused on technology companies, fell by 3.56% and Bitcoin dropped by 15% to a low point. The S&P 500 index had its worst day since April. On Friday afternoon, Bitcoin fell about 120%. The price went from $122,500 down to a low of about $104,500. Ethereum, the world's second largest cryptocurrency by market capitalization, dropped by about 21%. And as analysts explain, the aggressive sell-off of cryptocurrencies was triggered by a flight from risky assets, since no one understood what to expect from the new trade war, or rather the new stage of this trade war. The most speculative coins, of course, suffered much more. For example, Dogecoin fell by more than 50%, and the coin of the United States President, Donald Trump, this Trump coin, dropped by about 63% at its lowest point. But what does so-called leverage have to do with it? We're moving quickly without any unnecessary details. The overall market decline was made worse by the fact that a large number of traders with high debt were borrowing money to increase the size of their bets. This is a high-risk game that has become common in cryptocurrency trading. If things go well, the winnings from a leveraged bet can be quite substantial, but when traders find themselves in a tough spot due to a sudden price jump, it can lead to huge losses. And this brings us to the so-called liquidation, which has also been talked about a lot in recent days. The thing is, exchanges can automatically close high leverage positions when it becomes clear that the losses will exceed the investor's ability to cover them. Forced liquidation of positions contributed to the scale and magnitude of the shock in the market. Let me quote Samir Kerbagi here. He is the director of a crypto asset management company. Quote, Friday's move became a textbook example of how leverage can amplify short-term volatility in a 24/7 market. As prices fell, a wave of margin calls and forced liquidations swept through exchanges around the world. But that's not all. Investors also began to worry about possible technical flaws in the cryptocurrency market after stablecoin trading, used on the Binance cryptocurrency exchange, briefly lost its peg to the United States dollar, 1-to-1. But the thing is, stablecoin is valuable precisely because it's supposedly pegged to the United States dollar. And so, in some modules of the platform, there were brief technical glitches, and some assets had problems with depegging due to sudden market fluctuations. Naturally, there was speculation. The thing is, experts noticed so-called anonymous accounts owning cryptocurrency wallets that could have benefited from short selling in the crypto market and possible insider trading. Some people appeared to be waiting for a sharp crash, and when it happened, they quickly bought cryptocurrency. And now, specialized publications are already reporting that they have tracked how an unknown market participant made a huge profit of $88 million by opening a short position on Bitcoin, just 30 minutes before United States President Donald Trump made an unexpected announcement about introducing new tariffs against China. At the same time, so-called short-term holders managed to quickly buy up 500 Bitcoins at a very low price. And blockchain data shows that 2 days before Trump published his statement about the new tariffs, on the social network True Social, large holders took short positions on Bitcoin and Ethereum totaling billions of dollars. But I should note here that although speculation about insider trading is widespread in some segments of the crypto market, proving this claim is extremely difficult. Did the cryptocurrency bounce back after that? Well, on Monday, Bitcoin hovered around $115,000, stabilizing after falling below $105,000 on Friday. But it hasn't recovered all its losses yet. Today on Tuesday, Bitcoin went down again, although on October 6th, let me remind you, Bitcoin reached a record high exceeding $126,000. In general, despite the fact that cryptocurrencies have recovered a little and stocks have regained their positions, the market is still overshadowed by uncertainty. Silver futures, a safe haven in times of uncertainty, rose by 7% on Monday, reaching an all-time high. Everyone switched from gold to silver to invest, but crypto has still fallen sharply. So here's the question. Did Donald Trump and the people close to him make money from this? Write your opinion on this topic in the comments below this video. Also, subscribe to the channel, hit the bell, and don't forget to like. That's all for now. Take care of yourselves. Bye, everyone.